Well, we have made it to the last full week of June. Hard to believe the first half of the year is almost complete, but want to share with you the latest data here in the Austin metro area. I want to start talking about investors. We work with a lot of investors, and a lot of the questions is, hey, I can't find anything, or this is a hard market to invest. So, my question is, are investors coming in? Or are they going out? Well, actually, it's both. So, this article on Bigger Pockets this past week said investor owned home sales reached the highest levels in decades. So there's lots of people selling their investment properties, but I'm also going to show you they're buying as well. Anyways, data shows we've got more homes as a percentage for sale from investors than we've had in decades. And of course, a lot of people bought homes in the last decade, especially with low interest rates and pre COVID, and rents were flying and everything was great, and it's getting harder. But I think you also have some hidden data here where you have a lot of baby boomers who, look, you've owned a rent house for 20 years, it's time to cash out. And so I think you're going to see that a lot. So, where are they selling? They're selling in the Midwest and South and markets in Missouri and Oklahoma. You're seeing about 17% of sales from investors. You've got Georgia, Kansas, Utah, Nevada. That's where they're selling. But here's the irony, it's also where they're buying. So these states also saw the most buying activity. Investors in Missouri and Oklahoma, you're seeing 18 to 21% of all sales. That's one out of every five sales is somebody buying an investment property in those states. You've got Kansas, Utah, and Georgia again. So what are they looking for? Well, investors bought homes priced right around 300,000 or below. Now, I'd say that's probably single family properties. If you move up into larger properties, duplex, quadplex, you're probably paying more than that. But anyways, they bought homes right around 282,000 on average. This is national. Uh, and then you've got small investors. What is a small investor? That doesn't mean they're short. It means that their portfolio is smaller, maybe one home, maybe 10 homes, even up to 20 or 25 homes. That would be considered a mom and pop investor or a small investor, not an institutional investor. So they're making up almost 60% of the purchases are people like you and I buying a rent house. And yes, most investors are going to use debt. So they are getting a mortgage so that they can finance that property. But where are they buying? I just mentioned that. So this came out from realtor.com this last week, the 10 most affordable cities where investors are buying big. Yes, there's one in Texas. It's San Antonio, came in at number 9. If you're not familiar with Texas, the 4 big cities, Dallas, Houston, Austin, San Antonio. Austin is probably the most expensive in terms of a median home value. We're not as geographically spread out, and we have a high tech and high income population. So the price is a little higher here. But a market like San Antonio, which is pretty equal in size to Austin, the city limits are much bigger, but it has a much more affordable demographic. You have a lot of military bases there. And so San Antonio has kept its median home price lower than the other 3 big cities. And so we're seeing investors go there. Well, where else are they going? If you do follow investor circles, you know Memphis, Tennessee has been a hot market for a long time. It's very affordable there. So Memphis, Oklahoma City, St. Louis, Kansas City, Birmingham, Alabama, Indianapolis, Atlanta, Miami. Miami surprises me a little bit. I think that market is getting ice cold right now. So I'm not sure I'd put that on the affordability list. And then, of course, you've got Columbus, Ohio. So if you're looking to invest, just know you can reach out to me. I actually know agents in every one of those markets and happy to make a connection there. Well, let's get back to Austin. And let's talk about what's happening here. So, again, we're wrapping up the first half of the year. Generally, the second quarter, which is what we're wrapping up right now, is typically where we see the most volume of sales. This is most buyers writing contracts and closing. Well, we're sitting, leaning pretty heavy towards a buyer's market, maybe as a whole market. We're not quite there yet, but once you dig into certain pockets, we're way over 6 months of inventory, downtown condos, maybe resale in a lot of our suburbs, stuff like that. You're going to see higher inventory. Supply way up. So right now we have just probably single family and condos. We're sitting almost 15,000 properties average for sale. If we go back pre-pandemic, we were around 8,000 to 8,500. So we're about 90% more properties for sale than we had maybe 6-7 years ago. If I look over at demand's a little different. And so while it's down, it is down. It's not as big of a gap as we're seeing on the supply side. So peak pandemic, we were selling about 4,000 homes a month. Pre-pandemic, we were selling, 34, 3,600. Right now, we've been selling about 2,800 to 3,000. So yes, it is down. Demand is down. Call it 600 to 1,000 homes a month. Not nothing. Call it maybe 20, 25%. But we're 90% up on listings. So we just have more sellers trying to sell than we have buyers trying to buy. I wanted to show this one to you as well. This is a different piece of software. This is Area Pro. It's trying to pull the same data and share us metrics. It has 5.9 months of inventory right here. Well, why is it different? My guess is because I think Area Pro is pulling in more types of properties. So I think the other site might just be single families and condos, for example, whereas this site might include duplexes, quadplexes, land, townhomes, condos, single family, maybe everything. So it might be getting a bigger supply of properties. But what I wanted to show you was this chart right below me, right here. Where is the inventory? Where is it? So if we look underneath 250,000, there just isn't a lot for sale there. They're probably teardowns or maybe way out in the country somewhere like a manufactured home. But really the meat of the market starts 250 to 300,000. These are the low end of the single family home market in Austin. And really it builds up big, the 300,000 to about 700,000. So if you want to think about where are all the homes in Austin, that is your biggest pocket right there. And that's where we're seeing the most inventory or supply. Think about a home builder. What are they going to build? They're going to go out in the suburbs and they're going to build a house that's worth 300,000 to 700,000 because that's what the buyers expect to pay. And that's where the market is for, let's call it a starter buyer up to like a good middle-class home. Once you get above 700,000, obviously you see the inventory really kind of drop off. And this is where the market, in my opinion, gets a little tighter. I think the sales have been a little stronger in this category. Let's call it above 700,000, maybe to like 1.2. So we're going to call that the upper middle class. Maybe not luxury, but upper middle class homes, neighborhoods like Circle C, Avery Ranch, maybe nice parts of Crystal Falls, things like that. If you know those neighborhoods, those tend to be selling pretty well. But then we get into luxury and boom, we have a ton of supply. And so during the pandemic, we had so many developers all coming to town, going after that A-class luxury buyer. There's a lot of luxury supply. So it's going to take a while. They are selling, but there's just a lot of supply. In some pockets, it's over a year to a year and a half of luxury inventory. So anyways, pay attention to that. All right, let's look in real time. This is the historic sales price trend for the past 3 years. The peak of the peak of the peak of the pandemic was May 2022, which is on the far left-hand side of this chart. Well, what does the last 3 years look like on price? And I know it doesn't look terrible really on the right half, but I want you to pay attention to a general trend because we're still in it. Obviously, we were skyrocketing in price in 2022. Interest rates went up and we skyrocketed the other direction down. But what has happened the last 3 years? Here's the peaks, here's the peak, here's the peak. The highs have been lower. If you could draw a line for the last 3 years, it's just been trending down, call it 3 to 5% a year. And if I look at the lows here, here, and here, and you draw a line on that, they've been going down. So if you just think of a parallel, just kind of generally going down, the peaks are going down, the lows are coming down. We're kind of bouncing above that 400,000 median home price, but it is softening. We continue to see it soften. I think our high this year on price is going to be lower than last year, which will be lower than 2023. Why? More supply, fewer buyers. That's it. More supply, fewer buyers. If I look over here on active listings, this is the supply side where we stand right now. This is just single family homes. This doesn't include townhomes, condos, land, duplexes, quadplexes, all the stuff. Just single family homes. We've got 15,000, almost 400 homes for sale. Last year, we had 13,700. So we're like 2,000 more homes for sale than we had last year. And remember, we're only selling about 3,000 a month. So just in the overage from last year is about 2/3 of our buyers. And so we've got a lot of properties for sale. If I go back to May, we had an okay month, about 3,100 sales. That's not bad. That might even be the peak for the last 12 months. I'm going back to last summer, 27, 28 in July. So 3,100 is the most sales we've had in the last 12 months, but we have 15,000 plus just single family. homes for sale. Doesn't include all those other categories. We just have a lot of stuff for sale, and it's going to take a while to get it churned through the market. In my opinion, that might be another couple years. Doesn't mean the price won't start to change in a couple years, but it's going to take a while to get all these properties sold for the sellers. Here are mortgage rates right now, despite all the crazy headlines that are happening in the world. And obviously, I'm hoping for peace. Hopefully, that is the resolution with everything that is happening. But mortgage rates, which are affected by the bond market, they're kind of holding steady. So we finished on Friday around 6.8%. We'll see where things go this week. But if you are a buyer, I've said it before, I'm going to say it again, you're going to be somewhere between 6.5 and on the high end, maybe a 7.5 interest rate over the next 6 months. So ideally, just be prepared to run your numbers using that. If you are a seller right now, we're at peak inventory. Odds are we're going to peak out this month or next month. Let's call it July. And then over the course of the next 6 months, we're going to see the number of listings slowly go down. It's not because they're all getting bought. It's because fewer people are going to list their properties, number one. Number two, yes, some of them will get bought. And just as a cadence, we just have fewer sellers bringing properties to market in the second half of the year. Add all that together, you're going to see inventory come down. But we may also see buyer activity come down as well. Typically, it always slows down every summer once the temperatures start getting close to 100 degrees and everybody needs to go on vacation at some point. And so we start to see buyers spread out their timelines because they take their families on vacation or just, disappear for a minute until they come back to the market for work in the fall. Anyways, pay attention to that. Right now is a great time if you're a buyer and you want to look at the most properties in the market. I'd say the next month or two is when you're going to have the most opportunity to see those properties. Anyways, if you want to follow us each and every week, make sure to check out our YouTube channel at Ryan Kelly Group. Click that subscribe button. And of course, if you know somebody looking to buy, sell, invest, or finance here in the Austin metro area, would love the chance to talk with you. Anyways, let's wrap up June. I look forward to talking with you next Monday. Thanks.